The challenge of climate change requires the financial sector to reinvent itself. This capacity for adaptation and innovation has been demonstrated in recent decades by the emergence of new markets, such as green bonds or green bonds. A green bond is a debt instrument issued by a company, whether financial or non-financial, or by a public entity, such as a city, region, government, or even a supranational entity like a development bank. The World Bank on the markets to finance only projects that contribute positively to the environment. The main difference with traditional bonds lies in the commitments made by the issuer regarding the use of funds, which must have positive environmental externalities. In 2007, a group of Swedish pension funds wanted to invest in projects that contribute to the climate, but they didn't know how to find these projects. They turned to their bank, SEB, to see what could be done. The bank contacted the World Bank, which has expertise in investing in environmental projects around the world. Discussions began. Finally, one last player was brought to the negotiating table, the International Center for Climate and Environmental Research, CESRO, an interdisciplinary research center for climate research in Oslo. Its role was to report to investors on the positive impact of the projects on the environment. In November 2008, the World Bank issued the first green bond, denominated in Swedish kronor, for a total amount of 2.7 billion kronor, with a coupon of 3.5% and a maturity of 6 years. The rating of this first green bond was AAA. Between 2008 and 2012, the growth of the green bond market was rather modest. Afterwards, it became exponential, rising from $2.6 billion in new issuances in 2012 to $258.9 billion in 2019, according to the Climate Bank Initiative. Among the major issuers, companies and banks on this market, you can find SNCF, Apple, Engie, ICB, and Crédit Agricole. Today, there are two main international standards that serve as references and allow for verification of the integrity of the green label assigned to a debt. The first standard is the Green Bond Principles, published in 2014 at the initiative of the International Capital Market Association, and which helped to standardize the definition of a green project that can be financed through a green issuance. Its executive committee in 2014 was made up of 18 organizations. For example, among the members of this committee, we find the following. Among the investors, there is Natixis Asset Management. Among the issuers, EDF, the European Investment Bank, and also GDF Suez. And of course, the World Bank. Among the subscribers, there is Crédit Agricole and also SEB Bank. The second internationally recognized standard is the Climate Bond Standard, launched in December 2010 by the Climate Bond Initiative, and finally there are other regional standards. For example, in Asia there are the China Green Bond Guidelines, Hong Kong Green Bond Guidelines, Asian Green Bond Standards, and also the Japan Green Bond Guidelines. In March 2020, the European Union's Technical Expert Group on Sustainable Finance published a guide for European green bond standards. Since the launch of green bonds 13 years ago, we have witnessed a ripple effect with the creation of new bonds: climate bonds, blue bonds, social bonds, and also sustainable bonds. The latest innovative product on the market is the wildlife bond, an original idea from the World Bank to save rhinoceroses.